have to pay taxes on short-term capital gains? The answer is yes, you do. The question should probably be rephrased as at what tax rate? Well, it's my understanding that if you have short-term capital gains, you have to pay at your ordinary tax rate. So also, what do you mean by capital gains? That usually has to do with whenever you sell property under the code section of 1031 property, which is property that's held for business or investment purposes. So if you only hold it for a short period of time, well then it's considered a short-term capital gain, and you can offset your short-term capital gain against your short-term capital losses, which hopefully you don't have any of those. But you could see how that could work is if you were buying and selling houses, is that you buy a house, you fix it up, you turn around and sell it in a matter of 3 or 4 months. Well, that would be, and you make money on it, that would be considered a short-term capital gain and taxable at your ordinary rate. Now, short-term capital gain versus a long-term capital gain, I believe the holding period is for 1 year. So if you hold your property for long enough to qualify for long-term capital gains, long-term capital gains are taxed at a rate of 15%. Now that code provision, or the Internal Revenue Code provision, may be being phased out this year. I think that was under the Bush tax cuts, but I could stand to be corrected. These are more something that you could talk to your accountant about. But if you hold investment property for more than a year, well then when you sell it, then you can take advantage of the long-term capital gains. Now, whenever you sell your home, however, if you lose money on it, no matter how long you've had it, you don't get to take any loss on the sale of your house, since you don't hold that for the sale of business, or it's not an investment. Whereas if you sell your home and you make a gain on it, you can exempt a certain amount of, you can exempt gains up to $250,000 if you've lived in the house 2 out of the past 5 years. But let's say that you didn't live there for that period of time and you had a gain. Well then, you didn't hold it for more than a year and sold it and had a gain. That would be a short-term capital gain, which you'd have to pay ordinary income for. So if you have any questions about buying and selling your property in the long-term or short-term capital gains, well, give me a call at 727-847-2288.